You think back to the dollar, 11 straight up weeks in a row. If you look historically at any chart, how many times do charts get 11 weeks up in a row? And then how many times afterwards do they actually have a pullback? And if the dollar is about to pull back, which I'm in the camp that it's getting very close to that, then I would think that gold, based on the performance of sideways to down chop versus very dramatic, sharp move up on the dollar, you could be looking at a big breakout on gold coming. It doesn't look pretty today, but as far as I'm concerned, the chart says as long as we don't take out 1870, then gold is fine in this range.
Recently, Gold Silver News posted on Twitter a breakdown in the dollar, which continues to dominate the gold market, could eventually push prices above $2,500 an ounce. Gold has outperformed most other major asset classes in the past 12 months as it continued to resist rising interest rates while maintaining its role as a safe bet against inflation. Gareth Soloway, President and Chief Market Strategist at InTheMoneyStocks.com, predicts a gold breakout with a weaker U.S. dollar. Despite the strong dollar, he views gold's resilience and bullish flag pattern as positive indicators. Gold Silver News recently tweeted, as gold buying continues to move from west to east, with gold most probably becoming the new reserve asset for central banks instead of the dollar, there will be a total repricing of gold. Soloway is confident in gold as a long-term investment, citing central banks' gold acquisitions as a potential indicator of anticipated currency devaluation. World Gold Council data shows that central banks returned to buying gold in June, increasing their inventories by 55 metric tons after a 3-month sales. Meanwhile, Soloway also predicts a possible downside for silver to $20 per ounce, but maintains optimism about its long-term rally. Silver, like gold, has benefited from recent risk-off dynamics as the metal reclaims some lost ground. Silver prices found support once again at the 38.2% Fibonacci retracement of the major 2021 to 2022 move at $22.5 before heading higher. On the other hand, Soloway states that various factors, including the Fed's stance and economic instability, bolster the dollar strength. The dollar index, which tracks the U.S. currency against 6 others, fell 0.23% to 105.91 on Friday, but was on track to end the quarter up 2.93% and post an 11th straight weekly rally, its longest such run in 9 years. It is down from a 10-month high of 106.84 on Wednesday. Now, we are presenting the clips of Gareth Soloway's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I mean, today's a pretty big down day in gold, no doubt about it, but we're still inside of this little channel here, or this little wedge pattern. So this would be known as a bullish wedge pattern. You would like to see it not get below the yellow line down here. That would be an area that you wouldn't want to violate. We can see that every time it's gotten down there, it's bounced up and then bounced down and bounced up. So eventually with this pullback, you want to see this turn back around and go up. I think it's just the strong dollar is just taking a little bit of a bite out of gold. But I would say this is that if you look back at that chart on the Dixie, right, the DXY, and you see this vertical move in the dollar, and to see gold holding up as well as it has during that, I mean, really look at the kind of the sideways to slightly lower chop we've seen. To me, that's a positive bias. That's a positive factor here. And again, in general, you would assume, okay, dollar up for 11 straight weeks, gold should be down 11 straight weeks, and it's not. And in fact, you've actually made a bull flag here. So I think that, again, what I've heard is that these central banks all around the world are loading up on gold. They're buying it. To me, that's just one more kind of intuitive reason for me to buy gold for the longer term here. And again, longer term for me is a year, couple years, 5 years, whatever it may be. But the thought process is these are the guys that control the printing presses. If they're buying gold, it's telling you that they know what they're going to have to do eventually, which will ultimately devalue these currencies, and gold will be kind of a store of safety. The only thing I could think of is that a lot of the Asian nations, the Eastern nations, own a lot of U.S. treasuries. So we know Japan is just a massive buyer. We know China has been holding on to U.S. treasuries, although I think they've started to reduce. But I think it could be a way to hedge what they see, which is what we all see, is that eventually the Fed has to go back to printing money, and eventually the devaluing of the U.S. dollar will occur. And so I could see it also being something of a hedge for them. They're buying this knowing what the downfall of the dollar will eventually be over the longer term. Silver's a little trickier, right? So we do have this kind of wedge pattern here. It has to hold on to this white trend line here. Otherwise, it's vulnerable down to about 20 and a half. And the only tricky thing with silver is that it's not as pure a store of safety as gold. So you have that industrial side as well, which makes it just a little trickier to kind of factor in. It's not just one thing, which is the safety trade of gold. It's more of the safety trade plus industrial metal. So again, I'm not quite as secure on that. I think eventually, longer term, it's breaking out. That's of little concern to me. I think it will break out. It's just in the near term here, there is a chance that it could go down to about 20.5. Is you have a Fed that is going to remain stronger for longer or higher for longer, and that's keeping the dollar strong. And then you also have a situation like you look at China, right? China's a mess right now. You have Europe a mess right now. And so the more countries are seeing instability in their financial markets, the more likely money is going to run to the dollar for safety. And it's so interesting, too, because, if you go back 6-12 months, it was all about de-dollarization, right? I mean, that was the big term that everyone was using. And it was all the dollar again is done with. It's going to be, and before you know it, the dollar's gone on one of its best streaks on the weekly. Look at the weekly chart. We're now at 11 straight up weeks in a row in the dollar. And again, it just shows you that the dollar is still king dollar. Now, eventually, I do think it slowly dissipates, but it doesn't happen overnight. Reserve currencies don't instantly become not reserve currencies. It takes literally decades to happen.
During the interview, Gareth Soloway expressed doubts about the Fed's ability to achieve a soft landing. Former Jerome Powell advisor Antulio Bonfim recently told the Wall Street Journal's Nick Timiraos that you need a lot of luck to stick soft landings, while BCA Research's Peter Berezin expressed skepticism to Timiraos that the Fed could stick the landing for very long. Soloway underscores the undervalued mining sector and anticipates substantial gains when gold breaks out. According to analyst price targets, shares of Royal Gold are expected to jump by 22.6%, which would come as a welcomed contrast to recent 22% declines. As the price of gold remains at a 5-year high, demand and volume go out the window, so the company has rightfully decided to take things a bit slower during the past quarter. Let's get back to the interview.
So the first thing to recognize is that this has been the quickest the Fed has ever raised rates in history, right? I mean, we've had higher interest rates, obviously, historically than this level, but we've never had such an aggressive raising. And this is kind of what always bugs me about like people that say, oh, it's going to be a soft landing or it's going to be no landing at all. It's like let's put this in perspective. The fastest they've ever raised rates, yet you don't think that they'll somehow break something when every time in the past they've always broke something when they've raised at a slower pace. So to me, it's a little bit of that hopium type thing, like, oh my, let's just hope it works out. Let's hope the Fed for once gets it right. Historically, that hasn't been the case. Now, having said that, if you look at this trend line here, let's go to our weekly chart. This is a beautiful trend line going back to 2012. And to me, look at this, how every little pivot top here, it runs into this and pulls back. And look at where we're getting really close to. So I have a target of 4.6% on the 10-year here. And I actually think that that might be a short-term top. Hard to know if it'll be a top in the next 12, 18 months. But to be honest, I'm starting to look to take trades based on maybe a top like for instance, a TLT, which is an ETF that kind of is inverse to yields. That is someplace that I'm starting to nibble just a little bit with yields up here. The GDX at least, and this is the GDX. And I just picked up a little bit of it because number one, we've pulled back pretty quickly from $30 down to about $27.90 where we currently are. There's an upsloping trend line from this low in orange. There's a longer term trend line going back to 2020 low, the COVID lows that's coming up here as well. So there's a bunch of different areas now in this lower range where I actually think it becomes an accumulation zone. And again, being that the gold trade and eventually silver to me looks very, very bullish longer term, I think it makes a lot of sense to be starting to inch into these miners here. Miners have not participated much because their costs have gone up so dramatically. So for instance, the price of gold hasn't increased dramatically to offset inflation. So miners suffered because their costs went up, but they weren't making a lot on the extra gold. You now flip that around. If we get a breakout on gold, and I think the all-time highs will be taken out, these miners will play catch up very, very quickly and have some serious upside. If you look at the Newmont mining chart, right, I mean, it's very clear that this is way down from levels that you go back to like you said, 2013, and it was down in this range. So to me, that's going to change, and that'll change when you get a breakout on gold. And I just love this support down here, $38, $37, just so much support. There's a very clear trend line connecting the highs from 2023 straight down. When we break above that, which is around 41 or so, then I think this thing gets a charge to it. So, again, my thesis for how I trade is to look for unloved, good quality plays. When everyone else hates them, I want to accumulate them. And right now, the miners are in that group, and that's the time to accumulate, especially with my view on gold. It's going to be tricky, right? Because it's going to be based on inflation. Like, where is inflation? How quickly will inflation come down so that he can actually cut aggressively? I mean, it's one thing to just lower and throw the markets a bone, but to do stuff that will have an impact on the economy, how much will he have to cut to do that? And again, is inflation low enough at that point to allow him to do that aggressively? Because the problem is, right, is that, he raised rates to where they are, and we started with inflation that was, 1%, 2%, and then we went up to 9%. If you start printing and you're at 3 or 4%, do you go up to 12 to 15% inflation? And so he has to be really, really careful here. And I think that's one of the issues for the market is the market right now doesn't believe that he won't come to the rescue very quickly. But I do worry that if inflation stays high, he's going to be somewhat handcuffed.
Looking ahead, the prospects for the gold market seem intriguing due to its massive demand. According to the World Gold Council's 2023 survey earlier this year, central banks continue to view gold favorably as a reserve asset. What are your thoughts on the potential for gold to outshine traditional assets in the coming months? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel. Thank you for watching.